I bought in a policy 10 years before and now the time is too tough and I need some money. Can I have that? Oh, I just don't want this policy anymore. I want to exit. I can't pay anymore. This is something very common line. I'm hearing that. So today I'm going to cover the 5 most common mistakes which client make it. I'm not saying everybody make mistake, but this is something really common in the clients. I would say avoid making these 5 mistakes. Leenaparwani welcoming you back. So as I said, we are talking today the 5 common mistakes which clients are making and how we can avoid those mistakes. Number 1, treat life insurance policy as investment plan. Big no for that. Traditionally, life insurance was seen that way, like LIC policy or many other cashback policy, probably endowment policy, many ULIP plans which are connected with the market link, and you think this is the very good policy. Yes, it is good, but these are not your investment policies. Treating life insurance policy as investment policy is total no for that. Of course, you are going into the policy, then it is investment is your purpose or the life insurance is your purpose. Such policies have a mortality charges, of course, which takes away most of your return. You don't get even the break-even point in next 10 or 15 years. This is good for a whole of life kind of a cover, which you can enjoy throughout your life, but don't consider them as an investment if it is the purpose, life insurance. Number 2, exiting the policy at the wrong timing. What's the right time? Is the wrong time? You'll probably not know with that. But imagine if it is your saving plan, you are just about to finish your period, 2 years to go, and you just exit that time. The charges are still going to be there for the future years, which you committed for that. Insurance-related investments or savings are a contract-based plan. So you made a contract for 10 years, you made a contract for 15 years. If you exit before that, you will have lots of charges, whether it's a life insurance policy or a saving plan. You're going to lose big way. Maybe consider consulting with your advisor. Advisor can tell you, okay, you have made enough of savings in that. We are already ahead of that market projection. Let's exit. There's no harm. I would suggest please consult with your advisor before exiting at the wrong time. It is really painful. Number 3, compare apple to orange. Not so good. A lot of people say, oh this friend has bought into this pricing. His policy is running so good. My policy is not running so good. By the way, his policy costed this much and my policy is costing this much. There are so many type of structures when it comes to insurance. Every different structure is unique. You need to really see what you are actually getting into that. The comparison cannot be done between apple and orange. You have to match exactly apple to apple, make a decision based on that. Number 4, not accepting the loading. Loading we did cover that in a previous episode as it. Why the loading happens, if you have a sugar, blood pressure, obesity or some other abnormal health condition, that is where the rating is coming. That is where your policy is rated high. But if you say, no, I don't want a rating policy, let's not go for it. This is actually you are the loser. Nobody else is a loser in that case because you are not accepting the loading or probably you're trying to find some cheaper way without disclosing the fact. You are a bigger loser in that case. I would say, yes, I'm seeing people saying, okay, here this company has loaded me. Let me find something cheaper in the whole market. I probably get something better. Accept the loading. By doing that, you are also accepting the contract with insurance company. Oh guys, I gave everything. I given all the information. Then insurance company accepted me. So you are at the most safest position. Doesn't make sense to you? Number 5, locking into a long-term plan without any flexibility into it. If you are getting into the long-term contract with insurance and those are not flexible, You might need to come and you might need to exit much before for some other reason. You may have many other reasons, either job is not there or business is not doing well or some other reason, whatever is the reason could be. But if you are getting into the long-term plan, do explore what are the flexibility is in there in the policy. What if you can't pay for some time? What happens then? What if you take a break? What happens then? Make sure some flexibility is in there if it is a long-term plan you are getting into that. I believe this information is useful to you, and so you can use to empower yourself when you are getting into the some insurance plan next time. Please don't forget to subscribe and like this video to continue to get my videos onto your screen first. And also, I would like to know what else you want me to cover. Product reviews? Are you interested? If so, please write into the comment box product reviews. I will be covering some different product reviews. If you have a specific product, please write into the comment box and I will address that.